Coming up, Tom and Scott take on when to take profits, how to target 5,000 a week in trading gains, stocks to own for the long term, your calls, and we end with a look at today's markets. Our first letter is from Sam, and he's asking, he or she, what do you mean take profit at 50%? Is that based on the forecasted move from charts? Guys?
Oh, so Sam, you are you're talking about it when we say take profit 50%. We're talking about for premium sellers. So if you sold something at $2, take a profit at $1. If you sold something for $1.67, take something at 87 cents, that kind of thing. If you sold a $5 wide spread for let's say $1, take profits at 50 cents. That's what that means. If you are talking about just a straight out position, like you buy a stock or you buy a call or something like that, no, that's different. Then you want to take profits at about 50% of the expected move. So what you should do is when you put a position on, it's not the forecasted move from the charts. It's the expected move based on implied volatility, and you can find that on any good trading platform today. They will have the expected move over the course of that expiration cycle, and you're hoping to get to about half of it. And the reason that is because you have a very high probability, up to like 80%, of getting to that 50% of the max move. So a probability of a touch, they call that. And that's why that's your profit target.
Okay.
Good.
Next up, in a recent episode, I heard you describe some of your positions as being in a long-term hold. I'm curious if these were the result of trades that did not go as planned. Could you please explain exactly what this term means and how you ended up in those positions? And what are some of your long-term hold tickers?
Yes. This I don't think I've ever gone into a trade thinking it was going to be a long-term hold, and then it evolves into that because the position's not working. So, a perfect example for me would have been the silver trade that I got into, earlier in the 50s, and it just kept going. So that would have been in the long-term hold category. The intention is never, for me when I'm trading, it's never to develop a position like that. And usually it means that something has gone wrong. So I don't have long-term hold tickers. I just have, in hindsight, I have positions that turn into it. So again, it doesn't start that way, but it morphs into it.
Yeah, I'm a little different than Scott in that there are some stocks like this quantum portfolio I just put together and these digital assets I've been buying. I don't look at those on a daily basis. That is going to be a long-term, those are long-term holds for me. I'm just going to put them away, see what happens. Also, anything that we touch personally, like our own businesses, we built 2 businesses that have gone public, and those are things that we would never, ever even consider selling any of them until we're done with that business. So, long-term holds are things that are very personal to us, like our own businesses, or like it could be a sector, like digital assets for me, or like quantum stocks. And there's always a couple things like that. I have a long-term hold right now in the Japanese yen. I'm long it. I have a long-term hold in bonds.
I've got that one now because of you too. That has turned into a longer-term hold. So that's a good one.
But generally speaking, if I'm buying or selling something, like my crude oil position right now, that's a longer term hold, not because I want it to be, but because it turned into it and I've got a little damage control to do until I can get that thing. I like to fight. I like to fight positions, and because it's a game to me, and I like to fight positions as long as I can. As long as the implied volatility and the implied volatility ranks stay high, I will fight to the death on individual positions. Sometimes I will give up, but more likely than not, I'll fight for a long time, and I consider those positions that I kind of got married to but didn't want to get married.
Okay. There you go. Remember to call us, 989-LOST-DOG. We get lonely if you don't call. Okay, so I have a couple $100,000 for the market to play with, and I would like to make $5,000 a week. Is there a specific trade, ticker, style, etc. that you would recommend for the best probability of success? I don't want to live in front of the screen, and I want it to be risk defined if possible. What would you say? Oh, dream come true.
I would say you try to
Perfect
get
reality.
hold. I would say you try to get hold of Scott's trades and then do the opposite.
Oh,
And you can
thanks.
I can almost guarantee you $5,000 a week. That's about
my
it. That would be my best recommendation. I have a few friends like that, but I mean, seriously, you're gonna have to figure out what. I mean, if you
That's
go
not
ahead, Scott.
reasonable. It's not reasonable.
Well,
You know,
sure
it's
it is.
just-
A couple
Well,
hundred
wait a minute.
thousand.
Wait a minute. If you say you have a couple 100,000, let's say that it's $250,000.
Okay.
You're trying to double your money.
No,
Right.
no, you're not. 5,000 a week. Oh yeah, 5,000 a week. Right, times 50 weeks. Sure.
Try to double your money on risk-defined trades that you don't want to sit in front of your screen. I'm sorry. To me, that is not a realistic expectation. Can it be done? Yeah, you can do it, but there's going to be a lot of risk in attempting to get that done. So,
Right.
you know, I don't know if there was more to this email, but from my perspective, I think this is unreasonable, and you need to dial it back and say on a just ballpark a $250,000 account. You know, we've talked about it. You know, you could go, 3-4x the risk-free rate. So it's just call it a little under 4%. So just call it 15%. Let's say you push it, you could go 20, maybe 25%. So I think if you go into something with unreasonable expectations, the outcome is not going to be something that you're going to be happy with. So I would dial it down. Can you make money doing defined risk spreads that you're not sitting in front of your computer on a minute-by-minute basis? Of course. There's a lot of different trades you can do. In my recommendation, there would be selling premium, not buying it, but you might find somebody that's looking to say, look, I think the market's going to have some big moves. I want to buy premium. We had somebody that said they were long premium in silver and doing great with it. Great. I'm sure you have been, because being short premium has been a disaster. Oil, the same thing. But overall, I think you got to recenter the expectations.
Scott's right. I'm
Yeah.
gonna eat my words on this one. Scott's 100% right. I think if you set a realistic expectation, let's say at 250,000, and you set a realistic expectation of a 20% return using that kind of approach, set it kind of and not have to watch it every tick, define risk, and your goal was to make $1,000 a week,
Yeah.
I think that's doable. I think if you're talking about doubling your money, that's not doable.
Well, not with defined risk. You have to be willing
No.
to lose. You have to be willing to lose a
Yeah.
substantial portion of it if you want to try to double your.
I mean, it's common sense.
Yeah.
That's all. Common sense.
Yep.
Okay, there you go. Next, do you ever trade with directional conviction such that you buy puts or calls, thus removing the profit cap? Also, when the VIX is elevated above 20, but a single ticker IVR is not elevated below 30, is that a no trade indicator for the ticker?
Well, there's two very distinct questions in here. Do we ever trade with directional conviction? And the answer is yes, of course. We're more likely with direction to trade futures directionally, because Scott and I both prefer the premiumless futures when we're going long or short. So index futures, silver futures, gold futures, bond futures. If we're just going to trade pure directional, now, if you're at a case where like you want to trade NVIDIA purely directional, sure, just buy or sell the stock if you want to. Or if you don't want to use the capital, sure, you can buy calls or buy puts, whatever. I'm totally fine with that. But more likely on a one-off basis, not as a general rule. But the second part of the question, put the question back up for us again, Sol.
It's up. I don't know if you can't see it.
Oh,
It's
I
when the
can see
VIX
it.
is
Do you want me to read
elevated
it again?
above 20.
Yeah. But when the VIX is elevated above 20, that's also really interesting, because you don't get, like right now, the VIX is over 25. And that's almost an elevation of 50% over the mean. And so, but it's going to be really rare not to have an elevated IVR right now, because it would be almost impossible for the VIX to be elevated and the IVR not to. What you do find sometimes is a low VIX and high IVR, but you rarely find a high VIX and low IVR. So when you have a elevated VIX like we have right now, sure, you want to stick with high IVR trades, and that would be, if it was low IVR, it would be a non-starter. The only stocks I could think right now that have low IVR would be stocks that are post-earnings. But generally speaking, when you have high VIX, you're going to have high IVR across the board.
Yeah.
Okay, we have a phone call. Howie from New York City. Hi, Howie.
Hey, Howard.
So let me pose this question. Now, I saw it on Reddit. I'm an older guy, and I have a lot of free time. So unfortunately, I look at Reddit, and I think these people, are supposed to know what, I don't assume they're total jerks. The guy wrote, and he was in a similar position to me. I have no cash in my account, but I have over a good amount in SGOV. So I sell puts. So I get buying power. And the question that came up, and I was in a similar position, I guess, with Oracle. So he claims that on the 9th, somebody exercised him. Now, supposedly it was the day of the 9th. So the next morning, or whatever, he said his broker sent him a margin call. And so he just turned around, sold the SGOV, and, quit. And I guess he took it. I would have sold it, but he took it. So the question is, he got charged interest. And he actually posted his position, whatever you would say normally. And it showed that actually the broker posted the transaction on the 10th, not the 9th, even though it happened the night of the 9th, supposedly. I have not been assigned since 2010, so I cannot remember. So, it was an early assignment. He didn't expect it. And this could happen to me with an Oracle trade I was in. And, I have no cash. But, so I was just wondering, he got charged interest.
Okay. Excuse me. Everything is correct here. I mean, assuming that he did get assigned, I'm not challenging that. So what happens is if you buy a cash substitute like SGOV or T-bills, if you want to go into T-bills, something along those lines, what you then can do is you can sell premium, which you did. You said you were selling puts, right? Or he was selling puts. So that's fine. And Oracle's, you could sell calls. It doesn't make a difference. You're selling options.
Yeah, obviously.
Yeah, so you're selling options, which generates cash. So what you're doing is when you generate cash, you're not borrowing anything because you're creating cash, and you're using the cash substitute to cover the margin required for that trade. If you buy options or buy stock, it's a terrible idea to go into a cash substitute, because what you're doing is you're earning whatever the SGOV is paying, a little under 4%, and you're probably paying 10, 11%. So it's a negative arb. Don't do that. The reason that the interest started being charged the next day, now what he could have done, which you said, he could have just closed the stock position and been fine. But if he wanted to keep the stock, then I'm assuming that's why he liquidated the SGOV. The reason is that it's T+1 for settlement. So even though it got hit on the 9th or whatever the day it was, and then it doesn't start accruing interest until the 10th, then let's say that he closed it out, that the sale doesn't occur until the next day. So interest is going to trail a day behind the trade.
Okay.
But the key takeaway here
Can I get a word in?
is you never want to buy stocks or options or trade futures, because that also is a sweep. You don't ever want to do that if you're using a cash substitute to generate some interest.
Okay.
Hey boys, I hate to break up this little festival of Reddit detectiveness, but we're
I'm
going
not
to lose
talking about
every
Reddit.
single.
I'm just talking about here's the trade.
I understand, but Howie, you're going to make us lose every single listener with this going down this wormhole of some guy, random rando that we have no idea who it is.
No, but here's the thing. This broker has, and I found out other brokers have this. If you sell something like SGOV, okay.
All right.
Okay, let's go on.
We lost Howie.
All right.
We're going to move on. I mean, you guys can take that offline. You can send Scott an email, Scott at Lossdog, and take it offline. But it's going to bore the hell out of every other viewer.
Okay. Our next caller is Ryan from New Hampshire. Hi, Ryan.
Hey, good morning. How's everyone doing?
Good.
Hey,
what
Ryan.
you got?
All right.
Don't make us do some sleuthing on Reddit.
No, you're spicy today, Tom. Let's see if we can ramp that up. All right. So hear me out on this. I think the bond market is hunting for a Trump put like we had with tariffs last year. So that was a 110 put. Once we got there in ZB, he came out, tacoed, said, we're going to pause. So here's my case for that. Strong negative correlation between ZB and CL. And if you want to look at that positively, it's rates in CL, whatever.
Yeah.
It's 0.85, really strong. If you run a linear regression since the conflict started, it only explains 60% of the move down in ZB. So there's another 40%. And you could say, well, inflation data, that doesn't cover 40%. So I think it's bond vigilantes pushing us down, looking for his point where he says, uncle. And if you follow the timeline this week, Sunday, he was saying short-term pain, it's worth it with oil at 120. But then over the next few days, it became Netanyahu coming out saying Iranians need to take over. Yesterday, Trump saying that we, quote, won, but we can't leave too early, whatever that means. I think we got to the Trump put, and he just isn't able to pull the trigger yet and do whatever. I'm saying possibly Friday, if not next week, he's going to back away no matter what's going on because the bond market's hurting.
I think you have a serious issue with the long end of the curve right now. And what we're talking about, for everybody listening, is /ZB. And this is the widest that the yield curve has been, meaning the 30-year right now is trading, I want to say, about 63 bips over the 10-year, which is the widest it's been in years. And the 30-year is back on a multi-month low right now, which means this puts the current administration in a really difficult situation because they can lie about a lot of stuff, but they can't lie about where interest rates are actually trading. It's not like something that's negotiable. So right now you're in a situation where if the Fed was objective, you're right, Ryan, if the Fed was objective right now, they'd have to say we're closer to raising rates than we are to lowering rates. And raising rates would be beyond a disaster for this administration and for the economy and everything else, especially when they've been promoting, how important it is to lower rates. So I think they are stuck. And I'm not saying that, you've solved the whole geopolitical mess and you put the macro pieces in a perfect jigsaw puzzle. But I agree with you that if you were to sell, if you were to sell some bond puts here, it's one of the more interesting trades on the board because I think you've got, maybe 2 points of upside and maybe a point of downside at the low 114s. I'm surprised we got under 116. And the fact that we're at 114, if we get into the 113 handle, it's going to be a shit show. And if they get below that, I don't know what this administration is going to do and how they're going to, worm their way out of it. So, Ryan, I liked your story.
All right, I was expecting more of a fight.
No. I'm with you, man. I'm on the same page. I'm on the same position.
And I just want to call out, to say, Ryan, the bond vigilantes, there's nobody that can move the bond market. So the bond market is so massive. And that's why it's a real market. Like it's telling you, that's why Tom's saying, look, the Fed can say whatever the Fed wants to say right now, and I don't know. I think they're still talking about 2 cuts this year. But again, if we get into 113, 112 handle, those cuts have got to be off the table. And then the probability is that they might need to raise rates. And that would be really bad. And, again, this administration tends to move and make decisions based on, what they think. If the market is telling them that, what they're doing isn't working, let's just change that. But from my perspective, this administration could say, we're done, war's over. I don't think the other participants in this, whatever you want to call it, war, whatever it is, I don't think they're going to agree with it. So just because, Trump says it's over, doesn't mean it's over. So I think we have a long way to go here. And I personally do think that there's going to be pressure on the market across the board because of this.
Yeah, what's interesting too, Scott, and I agree, there's not like some secret society of bond vigilantes. It's just it's interesting that the auction yesterday, it was a 10-year, and I think it was 75% or something. It was an exceptionally high number of foreign buyers. So, our debt is still desirable, but yet someone's driving down the long end.
It's a flight to quality, but like Scott said, unlike Bitcoin, where you might have Michael Saylor as a single point of failure, there is no single point of failure in the bond market. So, yeah, I listen. I think it's the best play on the board, or one of the best plays on the board. But anyway, let's move on. Thanks, Ryan.
All right.
Thanks, Ryan. I'm going to say to those that are wondering, why does Tom look like a ghost? It's because he's still sick, because he doesn't want to listen to our advice. Anyway.
And because I'm doing a press tour for the launch of Lossdog, and I'm in New York City, and so it's a little bit. I'm remote today.
There you go.
But I'll be back in Chicago on Monday. So
he doesn't have our amazing lighting in the studio.
And Sol, you're not going to read this, so I will. From the Dog Pound, Ron says, "Sol, love your shirt."
Oh,
and
yeah.
So I'll do this.
Remember, swag. Lossdog.com. Looky, it's so cute. I like this doggy. Anyway, all right, let's move on. And keep calling us, 989-LOST-DOG. Do you ever use the option market to capitalize on risk arbitrage spreads? If so, what strategy would you recommend? For example, this is a big one. The ZIM / is this Hapex?
No. So what it is, I had to look this up.
Yeah.
So hold on. So it's a German shipping giant. Hapag-Lloyd is looking to acquire Israeli cargo shipping company ZIM. So if you look at ZIM right now, ZIM is trading at $27.60.
the answer is no.
Right, by 69. The deal's at $35. There's no free money here. So the answer is, can you play this? If you are confident that this is going to go through at $35, yeah, sure, go ahead. But obviously the market is telling you that there's risk. So I have to look and see, where was this stock? So it looks like, I'm guessing that this was announced February 13th.
All right, listen, the reason it's trading there is because that's what it's actually worth. That's all that matters.
And there's risk that the deal doesn't go through. And then if the deal doesn't go through, it's probably going back to $20. So, and the ZIM options are not tradable. So you got a bunch of things against you there. My recommendation, just stay away.
The answer to the question is, we do not trade those plays.
Yep.
And for people that want to try to trade in risk arbitrage plays, you will lose all of your money. Maybe not the first time, maybe not the second time, but by the third or fourth time, it is a sure cause of death in the world of trading. Leave it to the risk arb players. It's not a retail game or a strategy. I promise.
I mean, if you want to have some fun and you have some risk capital and you want to say, I'm going to buy 100 shares for $2,700 and hope it goes to $3,500, sure, go ahead and do it. But don't get cute and think that you're going to outgame the game and, lock it in. It's way too much risk.
Okay, there you go.
Yeah.
Mohammed from New York City is on the line. Hi, Mohammed.
Hey, Mohammed.
Hi, Tom. And hi, Scott.
Hello.
How's it going, guys?
Good. How you doing?
Not too bad, not too bad. So I've been dabbling with been writing off and on to Tom and been talking to you. I've had a Johnny Size account for a year now, and I've looked back at my account, and most of my wins are coming from directional plays, because if I have iron condors with the $5 wide wings, they've generally been scratched, and I haven't been able to play any wall during the last year in my Johnny Size account. Now I've gotten somewhere where I understand volatility. I understand the game. I'm just considering sizing up my account so that I could play more of the wall plays than the directional plays, because looking back, my winners are all directional. What size would you say is a good one to start with, to get like what Tom calls a proof of concept for the next year?
You mean what size account, Mohammed?
I mean, what size would you say would be a good starter size to do wall plays?
I'm sorry, what play is it?
Where I can play volatility, be...
vol plays. You want to trade volatility.
Yeah. But I mean, are you asking what size account? or what size per trade?
What size account would you recommend?
Oh, okay. Yeah, I think ideally, absolute minimum would be over 25,000, and I would like to see between 50 and 100. Volatility is a slippery slope, and you can't put yourself in a position where one bad trade, like one type of scenario like oil or something that hasn't come in yet, you can't put yourself in a position where that can hurt you. So you can't do it much less. I mean, the absolute minimum would be 25, but I'd like to see between 50 and 100.
Agreed.
Got it. So I'll size up my account, and for the next 1 year, I'll do a little bit of a. Thank you very much. Thank you for that advice. And I'm loving Saul's shirt, and the way she takes what she calls Tom's abuse is amazing. But she needs to get her claws out once in a while.
Oh, don't you worry.
Oh, she does.
Don't you?
Yeah, Sol can take care of herself. Don't worry about that.
Yes,
don't worry about her.
Just
okay?
not
I'm
with
scared of her.
clients. Not with clients. I've been trained well.
You got to see that on screen. We're cheering for you, Saul.
Okay. Don't worry. You'll see it.
Thank you, guys.
Thank you.
Thanks,
Thank you,
Mohammed.
guys. Bye.
Okay. Well, that's good.
Yeah, they don't know that, like, on camera, you're all sweet and stuff, and you're like, you're nice to me and you're sweet and you just take it, and then, but off camera, it's like,
Dr. Yeah. Jekyll and Hyde. Sure. Okay. Thanks, Tom. All right, next up. How would you put on a tail hedge using SPY options and or futures options? Says James.
Hey, James. Tail hedges are something that are, you do understand what a tail hedge is. It's like you go out to outside of 2 standard deviations. So that's where we talk about the fat tails. So it would be somewhere less than 5 deltas. It would be like a 3 delta, 2 delta, but it have to be less than 5 deltas. That's where your unquantifiable tails are. And those are the fat tails of any trade. All you can really do at those levels is just buy those options. There's not really a lot you can sell there too, unless you go super wide, like 3 delta, 1 delta. But I wouldn't even do that. It's just buying, 2, 3, maybe a 4 delta option, and that's how you just think about it notionally. So if you have, depending on the account size, that you just buy however many notional options would cover you if the index got down to that level. And that's why people buy tail risk. And that's why if you look at index options in the SPX or the spiders, the far out of the money puts never go to zero until you get to all the way to expiration, because people buy a lot of tail risk options.
I mean, I'm looking right now for 1 week out, so a week from tomorrow. So SPX, the March 20 puts. So a week out, the 6th, to your point,
Yeah.
the 6130s are $7 by 740. If you drop to 6,000, so 130 points lower, there's still $5.
Yeah, they're $5, and we're talking about so what
You're talking about over a 10% move.
right. So in the SPX, for example, what is the 3 delta put right now trading for? The 3 delta.
Your 3 deltas start for a week out for next Friday. The 3 delta is 60.40 down to, we're still calling it 3 delta at 59.25 in that range.
So
And
they're probably around
they're $5. They're $4 or $5.
Yeah, they're $5. So it costs $500 to buy tail risk for about $275,000 worth of. I'm sorry, not 275. For $325,000 worth of notional.
Yeah, and those puts don't go anywhere. I mean, in a week.
No, not unless we crash. It's
Right.
crash protection. Yeah,
It-
I understand.
yeah,
But you want to
it's
buy
crash.
1 week. You want to buy 1 week protection. It's $500 for a week to protect 325,000 from a crash.
Not my recommended move.
Of course, it's not your recommended move, but the guys ask the question.
I understand, but that's how you would do it, and I'm saying I wouldn't do that. That's how one
Right.
would do it. I personally would never do that. To pay, I would sell that before I would ever buy it.
I'm going to tell you what I used to tell Tony Batiste all the time.
Yeah,
He did not ask if you would do it.
I
He
understand,
said,
but he's saying, how would you put it on? I'm
that's
saying
exactly
what
how
would do.
you would do it. You'd go
Okay.
to the
And I'm
3
just
delta.
adding a little color to
Hollow
that. To say,
Tom.
Oh, okay. You're
You
a
look
color
like a
analyst.
hologram. We're not going to pay attention to you today.
Oh man.
We're not going to listen to you because you look like a hologram. Hollow
I'm trying
Tom.
my best, Soul. I'm trying my best.
It's not good enough. All right, next. With the prevalence of online sports betting, what types of oversight are there to prevent fraud, such as players or their families benefiting from plays and stats? Also, are professional sports truly competitive and fair, or are they fixed to provide the most engaging content, a highly lucrative soap opera for the masses?
Am I allowed to give my opinion here or
Jason,
no?
yes, please.
Yes, you may give your that. This is a question about your
Yeah,
opinion.
because you're
Just-
real.
Just checking to make sure I can give my opinion.
Tom is
My
like an
answer
AI
is
Tom.
Sports, I think sports has a real problem that they need to get ahead of. They have made their bed by getting, they're connected at the hip to these gambling sites. They love
Yeah.
it because it brings attention to the sport. People want to watch the games now because they're betting on them. That's facts. You have now seen in basketball and in baseball, you've seen issues where there have been some questions. And it's a problem. It's a real problem. How do you stop it? You could see, in tennis, in any sport, these guys are so good at their craft that they can just miss because they want to just miss, and you will never know. My feeling is that the leagues there's too valuable to allow this to go down that path, because if they lose the confidence of the public, it's over. Nobody wants to watch the game. Do I think that these are fixed? No, I do not think they're fixed. Do I think that there are some bad apples? Yes. And these leagues have to do an amazing job of policing their own players, because if they don't, they're going to wind up losing their franchise.
I think you are 100% correct, and I also think that there's no real solution, because there's not a true solution. But what you can do is you can eliminate as many conflicts as possible. Like, professional athletes should not be able to be owners of sports betting books, casinos. They shouldn't be allowed to have parts of event-based exchange, like Giannis just bought a piece of Kalshi. I think that gets into a really scary thing. I think you have to be careful and try to eliminate as many conflicts as possible. I also think that when somebody gets caught doing something that's really bad, like Scott mentioned, a bunch of these professional baseball players last year got caught, fixing games for a ridiculously small amount of money, and
Crazy.
same in basketball. I think you have to make, the whole Chauncey Billups thing. I think you have to make a very public case out of this, and I think you have to make the fines and the penalties extraordinary, life-changing, because otherwise you run the risk. There's an integrity risk.
Yeah,
Yeah.
it's credibility.
Yeah, there's a credibility risk. And America right now, when you look at America right now, what is the one thing that has changed in the last couple of years? We are suffering from not an identity crisis. We're suffering from an integrity and a credibility crisis, because you don't know who to trust or who to believe.
Yeah.
And I think that that's something that we have to get back on the right track. And the way to do that is eliminate as many conflicts. And it's not just for event-based stuff. It's also in politics. Like the executive branch should not be able to invest in companies that they're making decisions on, privately. And it goes all the way down the line. And so I just think that we have to eliminate conflicts to bring back integrity. It's kind of the lifeblood of our democracy, is the integrity of our democracy. So I don't know. I just think that this is an issue for sure.
I have to say, watching a lot of sports, it does feel a lot of times, and maybe because I'm from South America and I don't know. There's so much corruption, etc., and conspiracy theories everywhere. I grew up with it. Sometimes I'm like, these people, they've been playing amazingly well, and then all of a sudden they're not. It's like they're not even there. They're not even playing. And you have to think, what has happened? Is somebody getting paid? Did they get paid to lose? I don't know. It's weird.
You must be talking about soccer.
Yeah.
Yeah, sure. Football too.
That's
American
not a sport in
football
America.
too.
And
even basketball. Come on, stop it.
That's not an American sport.
it.
Okay, we don't care.
Whatever. All right.
It's scary though, because
Yeah.
these guys men, women, these professional athletes are so good that they can miss and make it look like, I just missed.
And sometimes it's
But-
like the whole team. You're like, what are you doing? You're
I
not
will tell you
even-
though that I trust women in sports way more than men because they don't get
course.
paid the same amount, so there's less
course.
incentive. So I feel like women's sports
Wouldn't that be more of an incentive if they're not paid?
No, I feel like there's much more of the love of the game is a much bigger factor.
Yeah.
So I would argue that. Yeah.
Oh, you're sucking up to Soul now. All right.
He's
Next.
trying to suck up to the entire womankind.
Right.
All right, let's take Mike
I'm
from
a
Pennsylvania.
women's sports guy. You know that.
Oh, yeah, for sure.
Sure, oh my God.
That's your thing.
Just don't ever try to drag me to a WNBA game.
There we
Okay,
go.
stop. Let's just stop right here. Mike from Pennsylvania. Hi, Mike.
What's up, Mike?
Hello, guys and lady. Did you guys know there was a point shaving scandal at Arizona State, Kevin Headache or something like that, Headache? But did you guys know that the bag man was a bond trader from Chicago? By bag man, I mean he would fly there with the cash and spread the bets around to all the different booking places.
I did not know that.
I didn't either. Well, Bobby Hurley just got fired as the coach. Not because of that. I think you're talking about the scandal was a long time ago. But they did just fire him.
But the amount kept getting bigger because they would parlay it, double down, etc. But I found that interesting.
I mean, it's amazing when you look at the amount of money that these guys are getting paid, or at least allegedly getting paid. You know, it's
Right.
$10,000, $20,000, $30,000, and they're destroying their careers where they're making tens of millions of dollars. It doesn't make sense to me.
No, it doesn't.
But I would put nothing out of the realm of possibility for a Chicago Board of Trade bond trader. Entirely possible. That would be the one part
Here
of the
we go.
story that makes the most sense.
Or a Euro-dollar trader from the Merc, or
Yeah.
All right.
Not
Okay.
an option trader, but a
Right.
bond trader from the floor of the Board of Trade. Absolutely.
There we go.
That's funny. Okay.
Okay, so the question of the day is going to be, so ROI, return on investment, can the investment be too big? And I'll get to that real quick. So Wills Eye Hospital in Philadelphia, world-renowned, most competitive to get a residency. They had a small issue with the corneas. They're going to fix it. So I was waiting to see this superstar doctor, and I get there, and this fellow's waiting on me. Fellow as in it was a woman fellow, not like the term for a guy. And after I left, I was thinking, this person, they did 4 years of college, 4 years of med school, 4 years of a residency. Now they're getting to this fellowship. And I have a good friend. He's like, yeah, you guys, they print money, and our research says they should make $600,000 to $700,000 a year. But do you think there's too much investment in terms of, like, think about opportunity cost? You're giving up those 10 years or 13 years.
You're
What's your
saying to
opinion on that?
get to that point?
But they do it because
Well,
that's
you're
what they
saying-
want to do.
Yeah, that's what they want to do. I mean, I don't think anybody thinks they're giving anything up. That's their
Yeah.
goal, is they want to get to that point where they're able to do whatever the specialty is. So I don't think
I don't think so either. I mean,
Think so.
I for sure don't want my doctor going to community college and in 2
Right.
years going, hey, this is a great gig. Yeah, you're fine. Here, take
I'm
some.
actually, you know what? You've come a long way. I'm proud to hear you say that, because normally you'd be like, yeah, they're all the same. It doesn't make a difference.
I know, right?
So,
Well,
Well, now with AI,
I mean,
Scott, I'm pretty
But-
sure that my new doctor, being
stop.
DeepSeek, is
Oh, yeah.
your
wonderful.
doctor DeepSeek is telling you, I like that.
Dr. DeepSeek is really,
That's awesome.
yeah.
Well, yeah, the software question is, okay, they put all this information in before they get quote a real job. Is it going to take into account, 13, 14 years of schooling?
Hey,
When they get
Mike,
their
that's
first real
that's
job.
their call. They know what they got to do. What about a PhD?
Not
what about
to
somebody who does a
mention student
PhD
loans.
in,
No, but-
in ancient
but-
Chinese history who just takes 11 years, I mean, it's their
Well, no-
choice. I'm not
No,
knocking that at all.
I'm just asking if the software will cover
No,
those situations.
we're not going to be covering. That's going to be out of
No.
our realm. So
No,
that's
yeah. You're way out of our realm.
way out of our area.
We're
trying to
covering
make
we're covering 85% of the people. Okay.
Okay.
Somebody's got to take the other 15%. Mike, got to jump, man. Thanks.
Yes, sir. Okay. Bye.
All right.
All right, let's go to the next one. Tom says trade small and often. Trading small is easy since my account size only allows a one lot. Trading often is challenging. Can you diversify in ways besides underlines and strategies? Is entering spreads on the same underline at different strikes and times in order to create more trades a valid way to diversify and create more occurrences? Our friend Larry.
Yeah, Larry, 100% yes. And don't let anybody, 100% yes. If you find, Scott and I traded one product for 20 years. It's not that that's the way to do it today, and that's not ideal. I think you leave a lot of opportunities on the table, but is it okay? 100%. You might find some underlying you really like to trade, and you want to have a bunch of different positions on in there, and it's easier to manage. Absolutely.
Yeah, totally.
No issue with that at all. I think that's a really smart question, and I think it's a really good way to approach the trade small, trade often.
Yep.
By the way, Larry, trade small, trade often it's just a math equation. It's all it is based on law of large numbers, and it's just a distribution of risk and opportunity. So don't think of it as it could be the same underlying, could be 50 different underlyings. Doesn't make any difference.
Okay. Cool. All right, next. We all have heard about many full-time traders trading only equities, building their wealth into many millions of dollars over 5 to 10 years. Does selling options have that kind of scalability given you are short gamma? This is Geary.
It's a very different thing. And so I would argue that if you look at the last 20 years, no. I would say that if you look at recent history, there are definitely, if you wanted to scale something into $5 or $10 million, it was a lot easier just to buy NVIDIA. Now, you don't know that 5 or 10 years ago. Like, you can't say, there's plenty of people who just bought Bitcoin and now they're sitting on, pretty decent sized paper losses. There's a lot of people that, started to load up on quantum and they're sitting on paper losses. So you really don't know this. With NVIDIA and stocks like that, you had to wait, 10 years, 15 years. So it's not like something's really obvious that way, but I do think there are certain situations where we had stocks that made some absolutely extraordinary moves in the bull market from 2009 to 2020, 2025, whatever, 2026, that you could argue, nothing in history was ever that easy. More wealth was created since 2000. Even somebody like Warren Buffett, what did he do? Go from, I don't know, I'm to make up some number, but from like a $2 billion net worth to $100 billion, hundreds of billions of dollars of net worth. So it worked across the board. And I think, that's one of those rare times in history. Is it going to be like that for the next 5 or 10 or 15 or 20 years? I really don't know. I think that the premium selling approach as a high probability strategic approach to finance works better for us because it helps us stay in the game. It helps us stay engaged. It helps us with finance as we understand it, but it's definitely not for everybody.
Yeah, and the big difference here, the takeaway is a couple things. One, obviously buying stocks, you have no limit on the upside. But then you need a move, as Tom was just saying, you need a move like we've just had over the last 15 years, and who knows if that's going to continue. So while, what worked for the last 10, 15 years, it may work going forward and it might not work. So, but again, our approach, the way we go at this is more of a premium seller. But as a premium seller, you're capped because you can only make whatever you're selling it for. So your upside is capped and your downside in theory isn't. So good luck in however you're going to approach it.
Scott, the dog pound says, the dog pound always wants your opinions.
Oh, thank you.
So no matter what Tom says.
I appreciate that. Was that Tommy?
That's his
No.
wife.
That's the
stop.
6. Yeah, that's the 6 coming out. Although
No, it isn't. It's the dog
I appreciate that.
All right, next. Fernando says, do you tend to favor simpler option strategies with few legs compared to the more intricate ones, and in doing so, keep things simple and with lower transaction costs?
So
Go ahead.
yeah, I mean, transaction costs they've been compressed to the point where they're so close to zero. It's so much different than it was, 20 years ago, where you did have, $7, $8, $9, $10 ticket charge plus 75 cents a dollar contract, whatever it was. So for me, I take transaction costs. I don't think about commissions when I'm making a trade. My feeling is I am more of a risk taker, so I tend to trade less of, complex spreads because I'm okay with taking the risk of just doing a naked option. But is there anything, is it keeping it simple? Simple for me might not be simple for you. And at the end of the day, what it comes down to is comfortability. We talk about this all the time. You want to make sure you are comfortable with whatever strategy you are doing. So if you are not comfortable selling a naked option, don't do it. If you are comfortable selling a vertical, great. If you're comfortable not selling a vertical, but you want to do an iron condor, great. So I think you just have to feel out what works for you and then stay in that lane.
All right. Tom, nothing to say?
I mean, it's a good answer. I think you're going to get better. I think in the old days there was a lot of the high frequency firms sought a lot more edge on a multi-leg spread, and I think today the more delta neutral a trade is, doesn't matter how many legs, because the amount of edge required is virtually the same. So I think it's like, for example, if I buy the guts a lot and sell the wings, I recenter all the time. And when you do that, years ago, it was really cost ineffective. And today it's actually cost effective. So I think things change in that sense. I do find that complex trades like a four-legged iron condor are more difficult to manage. So I sometimes prefer, just one side, like a credit spread or something like that instead. But that's up to you. Whatever I wouldn't worry about, like Scott said, I wouldn't worry about the costs, and I wouldn't worry about the give up to theoretical. But whatever's easiest to manage, I think that's the most important thing.
Yeah.
Great. Okay. With all that is going on, will the 1% wipe out the rest in the stock market, since COVID has revealed how easy it is to do so? Says Kayla.
Well, I'm not following. 1%, she's saying the 1%ers, meaning the 99%ers?
I guess, in the stock market, since...
I don't know, Tom, I don't know what the basis for this was, but again, the stock market is so massive, there is no 1%. I don't care how rich you are, you can't move the stock market. So, COVID, I don't think COVID revealed how easy it was. I mean, I don't know if we're talking about the meme stocks or COVID, meaning that the market broke hard and then we rallied. But again, this goes back to the question about, when somebody made the comment about bond vigilantes, the market's too big. You can't manipulate. Somebody has the potential to manipulate an individual stock, but not the market in total.
I mean, first of all, the 1%ers don't even know what they have. The 1%ers are not managing their own money, and they have no idea what they own. I mean, there's very few wealthy people, I mean, other than a bunch of traders that I know, that actually manage their own money. And so first of all, I don't even think that's, we're talking about can BlackRock, take the market down? Can Vanguard or Fidelity or some idiot money manager at Schwab or something like that? I don't know, but can somebody have that kind of impact? And I mean, I guess there's some risk because of the concentration of wealth, but it's not the 1%ers. It's the few firms. It's really more a question: can BlackRock, Goldman Sachs, Morgan Stanley, and that group who are managing? What do you have? State Street, Vanguard, Fidelity, BlackRock, and Schwab managing over $30 trillion.
Yeah, I mean, if they came out and all of a sudden collectively said we're all selling, our
but they would never do that, because that'd be biting off their own nose. It makes no sense.
Makes no sense.
Yeah, so no, I don't think that's the issue. I'm not worried about that.
Yeah. Okay, we have a poll in the dog pound. Are you currently long, short, or not invested in crypto? And the
We're
answer
currently long.
so far,
I do not have a position in crypto right now.
45% long and
Tom's long.
52% no crypto.
Yeah.
Nobody's
3%.
short crypto.
3%.
What?
Short 3% are short.
Okay,
crypto.
that's probably fair because you can get shorted via ETFs. But
2%.
crypto is the most
Futures and
native. Crypto is the most native long product, and I'm long crypto, and I feel good about it. I want to be long crypto.
Yeah. Okay, and then Andy from the Dog Pound says, do you plan to build out the Lossdog team to be as big as Tasty Trader or Toss one day?
We'll tell you.
We'll see.
One day,
Yeah, sure. Why not? I mean,
sure, why not? Yeah,
Yeah.
who knows?
Yeah, who knows?
We're building a new headquarters, Andy, so we got to fill it up with somebody. Otherwise, Sol's going to use it as a Pilates studio, and then we're going to be in really big trouble because Scott and I don't want to build out this whole new space for a Pilates studio. So we got to do something in
Scott
that.
might.
Yeah, I could get behind that.
Yeah.
I'm
Then
not getting behind that move, no matter what happens.
Okay. We may not need you. All right, next. Do you believe the U.S. market, the U.S. stock market, will outpace the rest of the world in 2026? And if not, which market do you think will do best?
I think the U.S. stock market is, for the first time in a long time, going to underperform the rest of the world in 2026. I think there's a lot of reasons. We've set some very bad precedents in early 2026, and we've done some really dumb things in the last 3 to 6 months that, I always say America's too big to fail. That's why I don't worry that much about certain things, but I do think that we are going to underperform relative to the rest of the world. This is what happens sometimes, and it's part of it's cyclical and part of it's just plain stupidity, but I do feel like America has hurt themselves a little bit, and we have to rebuild, starting with transparency, starting with integrity, starting with honesty, but we have to rebuild, and I think we're going to underperform other marketplaces. In Europe, we've outperformed for many years, year after year after year, and I think it's time that it's only kind of normal.
Yeah, I agree.
All right. Next up, what are your thoughts on monthly dividend ETFs for retired individuals? So Steve.
Steve, I have no issue with them at all. If that's what you're looking for, is a monthly, ETF, whether it's whatever they're using as the underlying. A lot of times they're utilities, but sometimes they could be lots of convertibles and different things like that. Just pick the sector you're most comfortable with, and they're structured that way for a reason. You can't sit there and watch the principal every day, but if the dividend yield, if the dividend stream is suitable for what you feel the principal risk you're taking is, structurally, I have no issue with it at all.
Completely agree. Again, if that's what you're looking for, great.
Right. Go for it, man.
Yeah, great.
Cool.
Yeah. Nowadays, with no commissions, with no transaction fees to buy and sell stock, you have very little risk trying things out. It's not like you're taking a hit, so
Right.
It's great.
Right. Okay, how do you approach building financial software like tech, stack, feature selection, etc.? Our friend Andre.
Andre, you go out and you find the smartest people. You find the smartest people. You find people that are a lot smarter than you. And you find the smartest people you can get your hands on, and you start there. Scott and I always have a lot of ideas, but we're not technologists by trade. And so we have to rely on, other people's technological skills and design skills and sensibilities, and we have to work with other people who we feel are brilliant to build really cool technology, and that's
Feature selection, I would say it's all your ideas.
feature selection.
Feature selections come from us. We don't typically lean on the developers to come
Right.
up with feature idea, the ideas.
Right.
But I will say that you need to surround yourself with a lot of, very capable, very smart people, and you can't let egos get in the way. Your job is more to manage the process and bring everybody together. Yeah, you set the feature set, you have the vision, you promote the product, but you need like middle and back end people that are just, that they're special. And we've been lucky over the last 25 years to find a lot of those people, and hopefully it continues.
Yeah.
All right, let's take one last call. Eduardo from St. Petersburg. Oh, is that St. Petersburg, Russia?
No,
I'm
Florida.
going Florida.
Oh, I didn't even know there was a St. Petersburg, Florida. Sorry about that.
Hello.
Yeah.
Hi.
Hey, Eduardo.
Hey guys, how are you? Sorry, I'm going in between St. Petersburg and Tampa. It's
Oh.
a beautiful place here. I'm noticing. Yeah.
Nice.
Oh yeah.
I just had a quick break from work, and I thought, might as well just give you guys a call and ask you a few questions. Hope everything is going good. I don't know if I have the time, but I did have some input about I found that really funny that you guys commented about mistress and
Oh, boy.
the mistress to married ratio.
Was that your email,
currently,
Eduardo?
I'm not sure, but I think I speak for the first or two standard deviation of men in the United States that make between less than 100K a year, and I think there's no money to be made about it's so expensive to afford a mistress, so I think women don't have to worry about men having mistresses because it's so expensive. You can't really afford it. So I would
That
say
is
women
not
don't have
the
to worry
answer.
about.
That is not the answer your wife or girlfriend is going to want to hear. That if you had the money and you could afford it,
Right, right. I think it's
Yeah,
going to
I mean,
put
that-
you in the
that- that's
doghouse
that's
for
something-
good.
That's
I'm
something
just
that I
helping you
might
out, dude.
consider.
I'm
you know,
helping
if-
you out. I'm helping you out.
Yeah, but that was I guess a comment in regards to that, and then also I don't have time to right now trade options, and so I'm trading stocks,
Okay.
and I'm doing mainly stocks, and as I mentioned, I was trying to listen to the conversation that you had about mean regression from the 2 or 3 standard deviation. Do you think that is still a good way of picking up stocks that maybe are oversold? I guess you can say
Well,
that.
I mean, it's
If, let's say, yeah.
you never know, but it's clearly better than buying. There's no proof that there is zero evidence. We've studied this that buying something when it makes a new high is necessarily going to go higher. There's just as much chance it goes lower. So my preference is I'd rather buy something with a lower basis than with a higher basis. So I like things that have pulled back. Sure.
Okay. Yeah, I mean that's basically what I was going for. Just trying to buy something that statistically makes sense, and then just hopefully I get a better schedule at work, and then I can at least trade the first hour of the trading day. But
That's
I had
awesome,
another
man.
question, but I completely forgot. So I'll
That's
just
okay. You call
let
back
you be,
next.
and
You
thank
call
you.
back next week.
And just to
Exactly.
close,
And
then, yeah, thank
so
you.
should women
Yeah.
look only for rich men so that they can have, because men are paying for everything, right? Is what you're saying?
Hell yeah.
So
yeah.
women can have lovers
Yeah.
as long as they're rich.
Yes.
So
Yes.
I don't know that puts men in a good place, Eduardo.
I don't know. I have mixed feelings about that.
Oh,
but,
of course you do.
That's probably a conversation for maybe get a drink or something and talk
Yeah.
about that.
We'll pass on it here. Thanks. Thanks,
Exactly.
Eduardo.
Thank you so much,
Thanks,
guys.
Eduardo.
Thank you.
Have
Thank
a
you.
great day.
Remember,
Okay.
we're
Thank you,
here
guys. Bye-bye.
Monday. Remember, we're here Monday, Tuesday, Wednesday, and Thursday from 9 to 10 Central Time. And,
Yes, and let's go to
also
Market Talk.
But go visit our website too.
Yeah.
Yeah. Market's heavy. Market's been heavy since yesterday afternoon. So you got oil I don't know if the oil's moving the market lower as oil's going higher, or vice versa. But oil's up 8.5 to 95. That traded down to 77. That's moving. So back up to 90, almost $96. You got SPOOs down 78. You got gold down 29. Nasdaq down 359. Silver up a dime, about to be unchanged. VIX future, is up 114. And that is trading at 24.10, and VIX cash is 26.47, up 224. It's a big number. I mean, anytime it stays over 25, it's a big number. Bonds, as we were talking about, stuck in that 114.14, middle of the 114 range. It's going to be interesting to see if that drops into the 113 handle. Apple getting hit a little, down 6, AMD down 7, Amazon down 3. Google down 7, Meta down 11, Microsoft up about 30 cents, and Moo down 18. So there's some red on the board. After the war was over, we had the massive rally. Now we're pulling back a little bit. What do you think?
Oh boy, this is ugly tape action for Thursday.
Yeah.
I mean, obviously, crude oil and the stock market have this crazy inverse relationship that in all my years of trading, I have never seen this before. Never. I have never seen every tick in S&Ps when they go down, crude oil goes up, and every tick in S&Ps when they go higher, crude oil goes down. I have never seen that. I think that is something to keep your eye on, and that is going to break at some point in the future. And I'm obviously not in the right position on that, but I think that's what you got to watch here. I also think you have to watch the VIX. Anytime you stay, like you mentioned, over this 25 level for kind of this long, and VIX is up pretty significant today.
Yeah.
We're at that 50% over the mean, and I think that's rare air. It's only here like 5-6% of the time. So if it gets into the 30s, you're going to see some wild swings. And so everything's on the table if the VIX gets into the 30s, and we're like we're a hair away. So I would be, let's see. Here's the thing, Scott. We have triple witching next week, and March triple witching over the years has been really, really bullish. The last 5 years has been down, but over the last 25 years, it's been up 19 out of 25 years, just been down the last 5 years. So it tends to be historically a fairly bullish week. Let's see. I liked Ryan, the caller earlier, who thought that we're getting to the point where, where Trump has one of those kind of sleepless weekends where he kind of, flips the cards over and says, "Oh, it's actually all great. We want everything. Now let's move on." That kind of thing. I can see that happening here because I think that you're seeing the economy start to slip away, and you're seeing inflation start to slip away, and you're starting to see interest rates slip away. And honestly, nobody in the U.S. really cares that much about what happens in Iran. And so, it feels to me a lot like Vietnam in the sense that why are we doing this?
Yeah. I am not as optimistic as you are, and I don't believe that a tweet that if you were to put something out to say all is great, everything's fine, nothing to see.
I don't think anybody will believe him, but I'm just saying.
I don't think that helps. I think we've got structural issues. I do believe macro issues are going to take a toll. You can't have oil around $100 for an extended period of time and think that it's not going to hurt the economy. It is. Right. So, I'm a believer SPOOs are going to be lower. Maybe next week they're higher just off of triple witching. But from my perspective,
you can't have inflation. You can't have higher interest rates, and you can't have higher oil, higher gold, higher silver prices.
And you
can't have every physical commodity going to the moon. Yeah. And you can't. It's just they're teetering right here. And you can't. And with volatility, approaching 30, you got to be really careful. So.
The trading opportunities should be really good.
Yep.
They should be really good. Yep.
Both sides.
You should have opportunities, and those are amazing days where you have somebody who's trading long and somebody who's trading short, and you're both making money. So,
on that note,
just be careful and hopefully enjoy the ride. So, happy Thursday.
we have a meeting with our fabulous developers. They're waiting for us, so let's go.
Ciao for now.
Ciao.
Bye.
Bye.